Well, Nike shares are lower in trading today. Second quarter results are due after the bell, as we've been pointing out. Investors will be closely watching things like inventory levels and any commentary, of course, about China, one of its biggest markets out there. With us now is Neuberger Berman senior research analyst Kevin McCarthy. He's also portfolio manager for their connected consumer ETF. The ticker there is NBCC. So, Kevin, Nike is a key story. It has a lot of kind of consumer overtones, perhaps some of those, whether or not China is a concern type overtones there. I guess now, Kevin, what exactly is the biggest thing to watch? Is it going to be those China results?
Great to see you, Dom. Thanks for having me. So, China is definitely going to be important, but the bar is low there. So I don't think the expectations are really what shareholders are focused on. The two topics that shareholders are going to be most focused on are, number one, progress with culling the North American inventories. And then I think beyond that, they can speak to some of the discrete margin recapture opportunities following what were very significant headwinds over the trailing 12 months.
Now, this is also a stock that still trades at a significant premium to the overall market. I mean, it's a brand name. We know it's a brand that people love, but it trades at 33 times forward earnings. Is this a scenario where investors are still trying to grapple with whether or not you should pay that much in price for $1 of anticipated earnings for Nike in the coming 12 months?
It's a great question, and I don't think the valuation properly reflects. It looks expensive, but this is an under-earning story. If you think about it, inventories last year, they're up 44%. That will be a high point. It should be a high point. We think the management team has eyes wide open at the opportunity, and we expect to see good progress on the inventory front, bringing it down into the mid-30s. So we think that's good for the stock, for momentum in the stock. And then on the margin front, like I mentioned, there's significant recapture opportunity, about 200 basis points with the disruption from freight. And then if you think about the resets that occurred in China and North America on the inventory front, there are about 150 basis points there. So there's significant there's significant margin opportunities, and for them to claw back on the earnings.
Now, Kevin, from a product mix standpoint, is Nike, in your mind, positioned appropriately with their mix for shoes versus athletic apparel versus everything else? I mean, and within shoes, are there enough models that are hot out there to be able to capture consumers' attention and get them to spend out there?
What Nike's done a great job is keeping their foot on the innovation pedal. So I think as we look into 2023, we're going to be facing a consumer that is going to be having to make decisions. As we look at the key inputs, wages and employment, that's going to be the contribution from growth from those factors is going to be coming down. However, when we think about all the essential spending that occurred, the growth in essential spending in 22, in the 10 to 15% range, that's going to be going down to, something where flat to up 5%. So as we think about consumer wallets for discretionary items such as footwear, Nike stands out as being a winner in that situation.
And last but not least, Kevin, is Nike or another company your best pick when it comes to athletic apparel and footwear?
Nike is our top pick on athletic apparel.
All right.